QuickBooks Pro Plus Desktop 2022 Inventory Reports. Get ready because we bookkeeping pros are moving up the hilltop with QuickBooks Pro Desktop 2022. Here we are in our free QuickBooks sample file, sample raw castle construction, going through the setup process with the view drop down, the open windows list on the left hand side, company drop down, home page in the middle. Maximizing that home page, opening up our Magent 2 financial statement reports drop down, company and financial. First balance sheet standard report. Gonna take that font up to 14, customizing the report, fonts and numbers, change that font to 14, and okay. Yes, please, okay. Same for the P and L. Reports drop down, company and financial, profit and loss, P and L income statement, customizing the report, fonts and the numbers, font change please to what? 14. Okay. Yes, please. Okay. There's our starting point once again, this time focusing in on inventory. Let's go on back to the balance sheet to do so because that's going to be an item on the balance sheet, changing the date up top, customizing the reports one more time, range of 0101. Let's make it 12/01/23 to 12/31/23 and run that report so that when we drill down on it, we have the detail for that month. And we're looking at the inventory line item. So we're tracking inventory within the QuickBooks system. If we're tracking inventory within the QuickBooks system, we want to know not only what the inventory total is in dollar amounts on the balance sheet, but also what type of inventory we have, the units that we have, the number of those units that we have as well. To do that, we need the subledger reports that we'll take a look at this point in time. Remembering that if you are tracking inventory or if you have inventory, you could conceive other methods that you might basically track inventory. You might be using something outside of QuickBooks, for example, to give subledgers to track the inventory that you have and then entering the data into, say, the QuickBooks system. If you're tracking, however, the unit items within QuickBooks, you will be doing so by setting up those items as we looked at in the past, and we'll look at in more detail when we get up to setting up the new company files. And if you're using the standard QuickBooks desktop, you'll be using then the weighted average method in terms of a flow assumption to do that. Let's see, and that's a whole kind of topic in and of itself. What are the different flow assumptions? FIFO, LIFO, weighted average, specific identification. But that's the general idea. So we have other reports that are going to supplement this in a similar way as we had with the accounts receivable and the accounts payable, giving more detail about this account. To find those, we could go to the reports drop down. We could then go to the inventory. And then if we knew which ones we're looking for, we could just select them. This would probably be the fastest way to go. But here, now, we're going to go to the Reports Center. Reports drop down, Reports Center. Let's maximize that report because it always does that little unmaximizing thing for some reason, which is kind of annoying, but that's okay. Inventory on the left-hand side. We got our two main reports up top, that being the Inventory Valuation Summary, Inventory Valuation Detail. Let's run the summary report. There we have it. It's as of a point in time, so we could change the date up top to 12/31/23. So I've closed the window on the left-hand side so we could see that in a bit more detail. So it looks a little bit like an intimidating type of report, but it's not too bad once you get a handle on it. Obviously, it's an easier report to read as well when you're using your own business and you know what these inventory items are. You set up the inventory items. Also, this being a job cost system, which can be a little bit more complex to follow as well. But in general, we got the information, we got what's on hand, we've got the average cost, the asset value, the percent of total assets, the sales price, retail, and the percent of total retail on the right. So typically we'll be looking here in terms of a subledger, in terms of the units on hand. The units on hand are things that we do not see on the financial statements because we're only looking at the dollar amount. We got the average cost, and the average cost is what we're typically going to be using with regards to how we're tracking the inventory within the desktop version by default, given the fact that they use a weighted average flow assumption, meaning that as prices change and fluctuate for the same unit or thing that we are looking at, the same inventory item, then we're going to be basically kind of doing a weighted average when we think about the costs of the units that we have, instead of using a first in, first out kind of, or last in, first out flow assumption. In other words, we're not going to be assuming that all of our units have different prices when prices go up for the same unit, but rather we'll try to kind of average out what the price will be. That's the general idea. So then we get the asset value. This adds up down below for the total assets for the inventory items listed by item, including the cabinets. So we got the total cabinets, the hardware, and the wood doors, and so on, adding up to the $30,683.38. Let's maximize this and check out what we got on the balance sheet. On the balance sheet, we got the $30,683.38, so it does match out. Note that you're more likely to have it not match between this report and the sub reports here than you are with, say, the accounts receivable or the accounts payable, due to the fact that whenever you post something to accounts receivable or accounts payable in QuickBooks, they actually force you to give either a customer or vendor, or respectively customer and vendor for receivable and payable, so that they can make sure that the subledgers, the reports by customer and reports by vendor, tie out to what's on the balance sheet. However, when you deal with the inventory, although you usually enter the inventory with a sales receipt or an invoice, and you use an item to do so, therefore the tracking will be in place, it's possible to record something to the inventory account without having the supporting item, or more possible at least, and that could throw off. If you do that, that will throw off what is on your balance sheet to what's on your sub reports, and you gotta be careful with that kind of thing when you're tracking inventory in QuickBooks. So then that's gonna give us your cost side of things. That's typically what we think about when you track the items in QuickBooks. But when we set up the inventory items, we also give them the sales price. In other words, when I set up an inventory item, we'll talk about this later more, but let's just take a look at it now. If I go to the items list, and if I was to set up an inventory item, we can just check out an inventory item possibly. Inventory item, here's one. And I'm just going to check it and edit that item. Then the cost is over here, what we purchased them for, and then we'd have the sales price. This one, they had a 0 on the sales price, but we have the sales price over here. That's how the system could know, what we're selling these items for. So we could track both the cost, which should tie out to what's on the balance sheet, and give us that added information back to the inventory valuation summary report, and give us some information on the sales price, so that we get basically our sales price item here with the retail items. This doesn't tie out to anything because we haven't yet sold them, so they're not on the income statement or anything yet. That's what we plan on selling them for. That's what we expect the retail price will be. Summary, meaning what we could sell them for. We don't put them on the books for the retail price. We put it on the books for what we purchased it for, because that's the value to us. That's what we actually bought the things for. And so that's what it's on the books at. But we have that retail price as well. And then you can get the percentages of the totals that are running on the right-hand side. Let's pull out the trusty calculator just to see that in a bit more detail. Calculator, we need you. We need you, calculator. So there it is. We're going to say then these percentages are going to be something like taking the 10,794 divided by the total, which is the 24,454, and then moving the decimal 2 places over so you can see the percentage of the total. Same thing on the valuation for the cost side, taking, for example, the 9,000 divided by the 30683.38, moving the decimal 2 places over, 29.33% about. All right, let's go back. That's the main report you'll probably be working with. If we go back to the report center, however, we also have the inventory valuation detail. Let's check it out so we can see what it says. So let's take that from 12/1 to 12/31/23. So we got the detail of this report, of course, giving our inventory items and then the detail within them, which includes the invoices, and that's the invoices are going to be representing decreases possibly to the inventory amount. And then we would have the increases, which could be represented, say, with bills, as we see the activity types of reports on the more detailed report. Back to the report center, And so those are probably the main reports we would take a look at. The inventory stock status, you could take a look at the inventory stock status, running that report. And so then we're going to see, let's close the item on the left-hand side. This gives our inventory items. The preferred vendor down below gives the preferred vendor who we typically purchase from. The reorder point, which could be a crucial point if we're trying to figure out, what point at which we're going to reorder the inventory items. The max, the on-hand items, the UM, unit of measure, order, the PO, the reorder quantity, and the next delivery, and the sales / week. You could customize these reports. If some of these columns are not applicable to you, you could go to the customize up top, and then you've got your columns and filters down here. So if this was not applicable, for example, you could remove it thusly, or you could just basically take this item and remove it like that. You can add them back in, customize in the reports, adding those items, say, back in with the checkbox. And there we have that. Let's open this back up again, going back to the report center. And then we got the inventory stock status by vendor. So the stock status by vendor, running that report, breaking out the information now by basically who we purchase from, who we buy the inventory from by vendor, similar types of information by vendor. Going back to the report center again, we're going to then say we got the physical inventory worksheet. So this could be a worksheet for us to give us basically a double check of our inventory. So our inventory is being tracked now with a flow assumption, which is a weighted average flow assumption. That means that it's a perpetual inventory system that we're using, meaning it's going up every time, we buy the inventory, we increase it, and then when we sell the inventory with the sales receipt or invoice, those two documents are automatically decreasing the inventory as we go, not requiring us then to physically, decrease them in our books. But we still want to, of course, track them to the physical inventory, in part to be tracking if there's any shrinkage or any spoilage kind of stuff, to see that our inventory is accurate. So we would want, possibly we can then print out a physical count worksheet and then do a comparison between the physical count and what is in QuickBooks. Obviously, when we do the physical count, if we had somebody else do the physical count, one internal control would be not to give them the number that is on hand in the system, so that they do a physical count, and then we can tick and tie them out to what we have in the system with our perpetual inventory system to see if there's any kind of problem, possibly any shrinkage or spoilage. Going back to the report center again, we got the pending builds. This might be something more applicable if we were making the inventory instead of just purchasing, marking up the inventory as well. So those are the major inventory reports. Remembering, of course, that going back to the balance sheet, most of these reports, pretty much all reports other than the balance sheet and the income statement, as is the inventory reports, are in essence supplementing a line item on one of the major financial statement reports. This one being inventory. Inventory on the financial statements broken out or given in terms of dollars. We also want to see the supporting units in place and the unit cost and so on.